Good morning from here, Dallas. It's just past 5 a.m. So excuse my...
Very good morning. And you're already wearing suit and looking like you've been up for a long time.
I've been up since 3 a.m. That's fine. Well, so I'll transition to a PowerPoint and I'll talk through about the latest offering from NHK Capital. So let me do that quickly. Great. So NHK, we're an affiliate company to CMB Regional Centers. CMB is one of the largest EB5 regional centers here in the US. And I know that my partner and colleague Vitaly Mudlo is scheduled to talk later in the day. NHK really focuses on non-EB5 investment opportunities, and as such, this NHK Dallas JW Marriott property that I'm going to talk to you about is based on a non-EB5 investment, purely investment grade. And because we're affiliated companies with CMB, what NHK acts as is also as a landing platform for investors who are interested in EB5, but not yet have decided to move into EB5 or have other reasons. As you know, in some part of the country, the world, we see devaluation of currencies, for example. They want to move money to the US in anticipation of doing an EB5 in the future. And NHK provides the perfect opportunity as a landing platform for such reasons. NHK, we, same as CMB, employ a limited partnership structure. What that means is that our limited partners, our investors, are able to invest in complex US commercial real estate investments through our partnership and have a passive investment. And you know, because one of the main factors that inhibit investments from overseas into commercial real estate in the US is probably having to deal with the intricacies of managing such investment. The partnership structure provides that the general partner, so in this case NHK, does all the heavy lifting, does all the day-to-day, and truly provides a passive investment opportunity in US commercial real estate sector. Before I go into the details of our offering, I just want to mention one thing. I've gotten many questions from people about why an investment into hotel now. As we all know, COVID-19 has been a challenge to many of us, especially hard to the hospitality industry worldwide. And that is the same situation here in the US. So if you look at the operational track record of hospitality projects, it's been a steep decline since about April timeframe of 2020 due to COVID-19. Understandably, because not only did cities and governments shut down economies, but also people stopped traveling altogether. Now, I have also seen that in some marginal cases, hotels are beginning to either transition to new properties, shut down, or even just go out of business. What that means, however, is in such downturns, we've seen historically that whoever is able to weather the storm, meaning to be able to sustain and survive this period, is going to be a winner. And it's typically a winner takes all situation once the economy turns around. And I am certain that the economy will turn around. So this investment here today is a development We've just started construction, which means for the next 24 months, it's going to be within construction period. And by the time it's ready to open its doors, it's going to be one of the newest, one of the glitziest hotel here in Dallas. So I'm certain that it's going to be positioned such that it will capture a disproportionately larger share of the market once that time comes. So we're preparing for the future is basically what I want to mention before we start looking into the actual details. The JW Marriott Hotel is located in Dallas Central Business District. It's consisted of 275 keys or 275 rooms. It's going to be managed by JW Marriott, the Marriott International Group themselves. And Marriott is actually, interestingly, in this case, investing $2.5 million of their own money once the construction is complete and it's operational. So quickly, why Dallas? Dallas is the largest city in Texas. It's not the capital, it's not the state capital. However, it is the largest commercial city here in Dallas. And if you look at Texas as a standalone country, it would probably stand, as the 10th largest economy in the world, and it's second largest in the U.S. and 10th largest in the world, as if it was a standalone country. The GDP as of 2019 is a hair below $1.9 trillion, or translated into GDP per capita, we're exceeding $65,000. And this hotel, as I mentioned, is located in the Central Business District. So if you follow my cursor, this is the hotel location, and this is the overall Central Business District area. And within the CBD, or Central Business District, we have about 6,500 businesses and many regional headquarters for Fortune 500 companies. And some of them include Comerica Bank, Neiman Marcus. It's a very luxury retail mall department store. JP Morgan Chase, which we'll talk about a little more in detail, Goldman Sachs as well. And so it's truly a business hub, and it's all from a walking distance from this newly proposed hotel. And if we look at a little closer to the block itself, this hotel is part of what we call the Trammell Crow Center master plan development. So Trammell Crow Center is a historical office building in downtown Dallas. It was built in the 1980s, and it's one of the landmarks. Recently, it went through a renovation, and JP Morgan Chase actually has bought out this entire city block, and they invested $140 million to reposition the mentioned Trammell Crow Center. And just across the street from Trammell Crow Center, they built this new parking structure, and on the lower right corner, that's not a rendering, that's an actual picture of the existing parking structure just adjacent to this Trammell Crow Center building. It's already a 10-story structure, and it's operational. The plan was always to build a new 275 key hotel above this structure. So and that structure is going to be a 15-story building. So in total, it's going to be a 25-story parking / hotel development. And quick note, the Trammell Crow Center is also home to the Goldman Sachs regional operations. So Goldman Sachs, understandably, has a large, operation here in not only in the south of the U.S., but overall this Dallas headquarter is now acting as a regional headquarter for the South, Southeast, Southwest for the Goldman Sachs financial firm. And so that Trammell Crow Center, although it was just repositioned not even a year ago, is already at 90% plus occupied, and it's in dire need of such a business hotel. And that's exactly the niche, the market demand that our JW Marriott Hotel is looking to fill. Quickly on the hotel itself, it's, as I mentioned, 275 keys. It's catered toward the business as well as transient and group guests. And so as such, it has a large grand ballroom, junior ballroom, 6 meeting rooms, boardroom. It's got a beautiful terrace. It's outdoors at the top of the existing 10-story structure. It's got a pool terrace. It's going to be beautiful. A few renderings. As I mentioned, the bottom podium is already in existence, and the plan is to build on top of it, and all the structural enhancements are already in place in order to facilitate this. A couple key strengths, so that I guess the takeaway from this new offering is that, again, the property will be managed by Marriott International. This is the Marriott Group. And they're also investing $2.5 million in key money. And that just shows how strong they believe in this hotel. Skin in the game, as we say it here in the US. And this project, this JW Marriott Hotel, is an integral part of the Trammell Crow Center Master Plan development. It's sponsored by JP Morgan Chase, the largest bank here in the US. And it's, as I mentioned, just adjacent to a large office building that's just been renovated. It's now boasting 90% plus occupancy. And on the other 4 quadrants of this building, on the left corner, you see 2 red sticks. That's part of the Dallas Art Museum. So it's a large public area in front of the building. And right next door to it is a very historical old church. So it's got a urban downtown feel, as well as a very down-to-earth, human proportion landscape. Another interesting factor to this, when we're looking at this hotel, is that because of the fact that the large hotel flags, such as Hilton, such as Sheraton, they have existing hotels in the Dallas area. They're dated, they need renovation. However, because of the existing hotels, there is a non-compete, meaning that these large hotels cannot enter the Dallas city market with new hotels because of the existing non-compete. So that, for JW Marriott, provides a moat, a barrier to entry, and an advantage over competition. Quickly, I'm going to go through some numbers, and I don't mean to go through it in detail. And if you do have more questions, you're interested in this, I can provide as much information, as much detail as you would like. This is meant to be a quick overlook. So quickly on primary competitors in the market. So we've listed 6 competitors in the same echelon, 5+ stars in the area. However, except for the 2 that you see in yellow highlight, which is the W Hotel, which is in Uptown, which is a little ways from the downtown area, and the Ritz-Carlton. Truly, all the other luxury hotels, so to speak, in the Dallas region is actually independently managed. meaning that if you're in looking for a large hotel brand that you trust, that you know you're going to have a good experience, you only have the W Hotel, the Ritz-Carlton, or JW Marriott that's going to be newly built. So that translates into the occupancy penetration. For example, Ritz-Carlton is constantly doing 80-85% occupancy, and this is probably one of the better performing Ritz-Carltons, overall in the world, I would say. JW Marriott, quickly, we're assuming, and this is based on HVS, which is it's the largest hotel advisory company in the world, and they're assuming a $209 RevPAR, or revenue per available room, and we'll see how that translates into the bottom line, to the operational profits of the hotel. Quickly on the project sources and uses, this is going to be a $132 million per position, except for the $10 million in NHK equity that we are out raising. All the other components are in place. There's an $80 million senior loan, $27 million mezzanine loan, and including NHK, $21 million in equity that is going to go into this property. And translated into per key base, it represents about $495,000 per room in development cost. Now coming down to our actual NHK offering, and this is typical of our offering structure. The target investment term is going to be anywhere between 5 to 7 years, more likely 5 years, because that's the pro forma. That's when the developer is looking at exiting either through a refinance or a sale of the hotel. Typically, a refinance would be in order. And we are actively subscribing investors right now. The minimum investment is $100,000. And it goes up in $50,000 increments, or 1 unit, meaning 1 unit is $50,000. We do have some fees associated with that investment, obviously. However, including the fees, so the projected returns are based on what is coming out of our limited partners, our investors' pockets. So projected return based on, say, $100,000 investment would equate to a quarterly distribution that amounts to about 10% of the investment principal every year, along with an overall target equity multiple of 2x, meaning that the $100,000 initial investment at the end of the 5-6 target investment term, as I mentioned, you would be looking at doubling that investment amount to $200,000. And translated that into a target IRR, it comes out to about 17% IRR. And we can have a sense of how this is going to, I guess, pan out, because this is structured as an equity loan with a bonus payment at the back end, meaning that there's a loan in place with interest reserve for the first 24 months during the construction phase that is already escrowed. And therefore, that 10% current distribution is going to happen through construction, through operations. And this is a bit of a, I guess, more detailed look at the aforementioned schedule. As I mentioned, in this case, I'm looking at the entire $10 million. There's going to be an annual approximately 10% cash flow. That is the function of the loan agreement that I just mentioned. And at the end, you will have, within the document, we are a profit participant, meaning upon exit, upon refinancing, there's a back-end bonus payment that amounts to a total of, in terms of IRR, 17% IRR, or in terms of equity multiple, that amounts to about a double of the investment equity. Quickly on the Sam Moon Group, which is the sponsor of this hotel. Sam Moon Group is a very well established family here in Dallas, very well respected. They started out in the trading business. They trade in jewelry, women's apparels, and such. They since transitioned to retail centers. They now currently own and operate 4 retail centers throughout Dallas. They own a 70-acre multi-use campus in the Woodlands area, which is near Houston. They also own, aside from this new JW Hotel, 3 additional hotels. All of them very successful so far. A case study for just a sense of what they are able to create and manage. This is a Renaissance hotel in Plano, which is about 30 minutes north of Dallas. And it's in an area called Legacy West. It was a $4 billion urban development plan, and this Renaissance Hotel was the key component to it. And you know, they opened the doors in 2017. Since then, they've been named the #1 Renaissance brand in 2019, Hotel of the Year in 2018, and so forth. And so I've visited the hotel personally. It's beautiful, and it's the same architects, HKS, which is a world renowned architectural firm based here in Dallas. That's going to do not only this Renaissance Hotel, but also the new JW Hotel. And so it's going to be a great execution. And the construction has just started, I guess 2 weeks ago already. And it's going to go on for the next 24 months, as I mentioned. I think that's my time. Again, this wasn't meant to be a fully comprehensive. However, I hope I was able to shed some light into what we're able to offer. If you're interested, our website is nhkcapitalpartners.com, or you can email me directly at nlee@nhkcapitalpartners.com. I will open it up to maybe some questions.
Neal, thank you very much. And before the questions coming, I want to ask something. Are there any barriers of entry to participate in the investment to this hotel, or you are open to any physical and legal entities?
Yes, good question. Yes, anyone can invest. We do go through the security checks such as OFAC, and we have an outside broker dealer that we work with who performs such reviews of our investors, and it's the typical review of where the money comes from and such. So with the minimum, I would say, regulatory review, any entity, any individual is able to invest. Absolutely.
And out of curiosity, how long does such review take? Is it 1 month? Is it 2 weeks?
No, it's typically, I would say, a couple weeks at most. And it's very well streamlined. So it's not you don't have to go through the brain damage, if you will, of having to figure out how to do it, because the Prevail group that we work with, they've done this 5,700 times through our EB5 offerings. So they are, it's a very well streamlined process.
Thank you. Neal, thank you very much. Wish you luck. And next time we're in Dallas, we'll come and visit the hotel.
Absolutely.
Thank you.